Hi there, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 22nd of October 2025. Precious metals took a pretty severe hit overnight. We had the likes of gold down nearly 5 and 6%, silver and platinum down about 7% as well. Basically, has been, I think, the silver and platinum, one of the top two or three rallies over 4 months, pretty much in history. One of the fastest $600 rallies in history for gold. I think a fair bit of profit taking, and also there's just renewed optimism on the back of US-China relations as well. So there wasn't necessarily much said from the Chinese end, as per usual. It was just more Donald Trump not getting the reaction that he wanted, and essentially then stepping it back a little bit. I mean, I don't know at what stage he's going to stop doing this stuff, if he ever stops doing this stuff. But, it's at the end of the day, one of the big reasons we've had that precious metals trade on is the spiraling US debt. And I think it hit around about nearly the $38 trillion mark recently after being flatlining for quite a while, which means they're still going to have to get rates down, which means precious metals is still going to be a decent trade overall. So if anything, it's probably not the worst. It's probably not the worst thing for them to have a bit of a breather. There's a bunch of corporate earnings as well overnight. As you can see, so the Dow eked out a bit of a gain, but there were concerns around Google as OpenAI. People are starting to get a little bit concerned about OpenAI competing in that space of the browser. OpenAI introduced last night ChatGPT Atlas, which is a new AI-driven web browser. This isn't new. Perplexity's got one. They launched Comet. We've had a bit of a look at it here at MPC. It's pretty decent. It looks very much like Chrome, and so there's not really a hell of a lot of difference. It sort of, I guess it eats into their complete dominance of the sector. So Perplexity being a bit of a smaller one, we use Perplexity a lot here. It's got great financial data on it. It actually bid for the Chrome browser because there was fears that before that antitrust case was ruled in Google or Alphabet's favour, that they were going to have to maybe split that off. So they actually bid for it, which is a bold move from a startup. They didn't end up having to do that, of course, but it's as you can see yesterday, the SPY was up as well. Nikkei and everything. I mean, obviously that big deal between Albanese and Trump yesterday. Albanese finally got his meeting. I think he was about 700th on the list out of 150 world leaders. And there was a big deal signed. So copper did pretty well. BHP nearly, probably I would say 52-week highs, maybe Rio as well. The whole sector, because gold is a big part of that sector, and gold bounced back in yesterday's Asian session. All of the losses were overnight, essentially. So you're going to see a massive hit in that gold miners sector today in Australia. I think that, the resources sector hit essentially a record high, which really did help the index. China was up as well. I believe they had some better than expected economic numbers yesterday. And, in terms of corporate earnings, this is sort of a little bit baffling, but Amazon basically took down half the internet 2 nights ago, which is why we had, yesterday's morning call was unavailable, because basically Riverside, which is the software we use, was down and we couldn't use it, as was Canva for a long period of time, etc. But Amazon was up 1% yesterday and then up another 2.5% overnight. That's just a baffling move. For having an outage. Very strange movement there. But there was a raft of sort of corporate earnings overnight. Coca-Cola was up 4%. They, basically beat expectations despite overall operating environment being challenging. 3M, famous for post-it notes, etc. It hiked its annual earnings margin guidance after strong results. It was up about 7%. And then we had defence companies did extraordinarily well. RTX Corp was up 7.5% after their US aerospace and defence full-year outlook and third quarter results smashed market expectations, driven by strong demand for its missiles and aftermarket services. Halliburton as well surged 11%, beat estimates, steady demand for all its oil field equipment and services in North America. GE Aerospace is, look, it gained only about 1.5% overall, but just essentially that entire sector with defence, which is something we've been very strong on for at least 12 months at MPC here, those results just continuing to come in really positively. For the banking sector, there was also some positivity with that Zion's Bank Corporation, which is one of the regional banks. It had better than expected quarterly earnings, which has calmed nerves around the health of those regional banks. But one of the big ones after the market, so this won't be in this heat map here. This is just the day session, but Netflix got hit 6.5%. There was some Brazil tax ruling and write-off, etc., and they sort of disappointed overall against the street expectations. Overall, you can see it's a pretty scattered market map there, realistically. Google obviously being down, I think, in the end, 2.5 on the back of that, the fears that they sort of they'll lose their dominance. And as you can see up here, like Coca-Cola doing very nicely. And, a little bit of strength in these, these retailers down here as well. So, and as you can see, RTX there up really nicely, as is GE. And some of these AI services companies were up overnight. ServiceNow, Accenture, Adobe, and CRM, which is Salesforce. I don't necessarily know what that's on the back of, but it's obviously a bit of a sector. There might have been a broker upgrade, etc. there, but there was nothing necessarily specific about those in terms of corporate earnings, etc. So Coca-Cola was obviously overnight. That's just sitting in the wrong column there. But we'll have Tesla on after the bell tomorrow. That'll be a pretty big one. It was a pretty dour and un-Elon-like commentary after the last one. We had Tesla on the Global Alpha, which is our short-term recommendation service, and Elon's usually fairly bullish, and I just didn't like his tone last time, so we sort of exited, but we do have it as a high conviction long term. We've got it in our AI robotics and automation enhanced growth strategy in structured products, because these fully self-driving cars and the Optimus bots or humanoid robots are going to be basically the future of the company, essentially. So I think Tesla, as in terms of, commercial passenger vehicles, will be in 3 or 4 years' time is going to be, the almost what uranium is to BHP. It'll be a byproduct, and it'll be just a single line. But Elon's pretty confident that those Optimus robots will be the main driver of the future growth of the company, as well as the energy part and the home storage of energy, etc., and the cyber taxis. So I would expect there's people that watch Tesla very closely. They've got a lot of jobs up at the moment. They've posted over 100 openings in the cyber taxi, and then another further 100 openings for developers in the Optimus robot. They've also ordered $680 million worth of parts for the Optimus project as well. So enough for it's enough for a good 50,000 of robots or something. I mean, look, that's obviously speculation, but I'm kind of expecting a bit of a show from Elon this time around, because you're not sort of making those moves and then not pumping it up. And he sent out a video to shareholders, which was on social media the other day, basically, giving an outlook on the future and vote with me and on all this sort of thing. So I would expect a bit of a song and dance from Elon tomorrow with Tesla, and he'll talk a lot about the future, which has generally been very good for the stock in the past. And then ServiceNow, I believe, will be after the bell tomorrow as well. And you've got Boeing, which will sort of wrap up that, a lot of those defense stocks as well. So there's still a fair bit of corporate earnings going on. And then, as I say, watching out for those healthcare names towards the end of the week, because the effect of Trump's threats and Trump's tariffs has not been anywhere near as big as what even the companies themselves have given impairments for. So realistically, better than expected results from P&G and HCA Healthcare, etc., might sort of start to see that's that healthcare IXJ ETF or the healthcare sector in general start to head higher. So United Health's getting a bunch of upgrades now. The bleeding seems to have stopped since Warren Buffett stepped in a few months ago. So just probably expect to see potentially further improvement in those sectors. Still not getting economic figures in the US. There's nothing really of note until we start to see that come through. Look, I mean, here we are in the third week of this thing. Everyone seems to have just gotten used to it. And I think that is the danger with Trump, is that there's so many enormous announcements that can have such large impacts on the economy, etc. And they're like once every 2 days that, well, I think it's breeding a sense of complacency in the market, whereby it's like, whatever, government shutdown. Trump's announced a trade war with China. Oh, he's wound it back. Like, these sorts of things from any previous president apart from him would be serious market moving things. Like a 3-week shutdown as well would be a massive deal. But Trump's just got that beautiful magic show going on where he distracts investors and distracts the public from all of these underlying issues like the debt, etc., by announcing some divisive or major announcement on Truth Social or on his morning press conference, where essentially it distracts from what the underlying things going on. So I think these will start to compound, and I don't have great hopes for the market in terms of the Christmas rally, because we didn't have that. We've actually had one of the most positive September, October periods in quite some time. So yeah, overall, I'd expect, this grind can only sort of go on for so long. And the more that this government shutdown, the lack of figures, I mean, if these figures come back in and we get 2 months worth of payrolls in one go and they're both horrible, it's going to send shockwaves through the market. So that's where, as you can see here, gold down plenty, silver down plenty, as was platinum. Uranium also took a hit. So all of those super hot trades that have been, if you flip this upside down, that's the way this bar chart's been for about the last sort of 3 or 4 months. And so some heat coming out of the thematics. It's not a big deal. There's no need to panic. We trimmed a little bit last week, which for about 2 or 3 days we were regretting, but now, I mean, this is the kind of reason why you take little bits and pieces on the way. And when I say trim, we're taking a quarter off, we're taking maybe a third off. It's not major. People, when we're trimming or we're recommending trims, people take it as, oh, you're bearish. It's simple risk management, and that's what you need to be mindful of, is just taking those small bits of profit along the way. So you get moves like this, but more importantly now is we've got a little bit of ammunition now to buy back in once we see a decent buying opportunity, because markets always get carried away and then, to the upside, and then they'll pull back into reasonable territory, they'll settle, they'll consolidate, and then that is actually more healthy for the next leg of the move. Nothing's changed for us because nothing's changed with the US debt. That's our major, and our interest rate outlook in the States. We think once those figures basically come back on, that you're essentially going to get some worsening economic numbers, and that's going to push the rate of cut expectations higher, and possibly having more and more cuts. Anywhere up to, I think Trump kind of, from what he said, and this, don't necessarily quote me on this, they want around about 2 to 2.5%, and then at that point he can refinance a lot of that government debt. It saves them $500 billion a year, and then essentially they'll print their way out of it. So all of those factors are very, very bullish precious metals and essentially bearish in the US dollars. I would wait to see this thing settle. I mean, we had a down 4%, up 4%, and then obviously been hit overnight. And that'd just be those momentum players taking some money off the table overall, and they've had an extraordinary run. I mean, the long-term momentum players would have made an absolute fortune in these things. I mean, they're up. Most of them are the third best runs in history outside of 2008 to 2011 and back in 1979. but pullbacks are to be expected. You probably, see how it settles over the next week or so, and you can either buy with momentum on the way back up again, or you can, start to dollar cost average back in. And that's the joy of doing that trim towards the highs, is that as I said, we've got some ammunition to buy back in towards those lows, or in those pullback prices as well. So I dare say those bullion cues that have been, the photos are running rampant on social media, will be a lot shorter today after that big hit, and the buzz will come out of it. But but overall, it's probably not the worst time to be buying, particularly if you feel like you've missed the move. Don't think it's necessarily over. Just probably keep an eye on it for the next week and start to buy in, because the investment thesis has not changed. People taking profits is not necessarily a reason to be getting out of a long-term position. Yeah, the Aussie market today, SPI was down about probably 0.6% overnight. Obviously, that mining sector, I think we saw GDX, which is the gold miners ETF, get pretty smacked up overnight. Probably, it would be in the vicinity of, I would say, about 10% odd. I didn't actually check that this morning, but having a look at some of our positions here at MPC, probably would have been around about that. Maybe give or take a couple of percent. Mining sector, uranium sector, probably lithium, and then just the general mining sector is going to be the drag today. The rest of the market should be okay. Pretty similar to that market map you saw from the S&P at the start of the pod. But look, everyone have a great day. And, obviously we've been recommending everyone should be reviewing their portfolios after this really great run. As you can see, the profit taking in those precious metals, similar things can happen in the equities as well. So it's a very good time to be going through, making sure that you've got yourself organised in case there's some form of move, and then you better plan moving on from there. But have a great day, and we'll speak again tomorrow.
General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.